everybody, welcome back to the One Step Better Business Podcast. I am Mike, and that guy over there is Matt. And we're really excited that you're joining us this week. Matt, this week we're going to talk about something that I think everybody's going to be interested in, and that
Yeah.
is money.
Yeah.
You're like, yay, I'm listening to an accounting podcast talking about money. That's pretty
That
obvious, right?
makes yeah.
But one of the most common questions that we get, especially from new business owners, is how do I get paid?
Yeah.
And you might think, you know what, that's a pretty obvious topic. Or you might think, yeah, you know what, I've had that exact question. So we're going to break that down today. But before we get too far into the weeds, we want to start with something a little bit more lighthearted. So our question of the week is Matthew Patrick, thinking back to when you were a little baby boy, maybe not a baby, but a little boy,
Little boy.
what did you want to be when you grew up?
I mean, everybody wanted to be a professional baseball player or football player. I thought about like it'd be super fun to be a general manager, thought it would be fun to be a coach.
Anything in the sports arena?
That was always what I was interested in. Um, you know, yeah, that's trying to think of anything non-sports related I even wanted to do. Probably not too much.
Yeah.
Yeah, I'll stick with that. I mean, I think I was a football player like 3 years in a row for Halloween. So I guess that tells me where I was.
Yeah, I wanted to be all of the normal boy stuff. I wanted to be a race car driver. I wanted to be a professional athlete, all that stuff. I think my first kind of
Like realistic job.
yeah, like, hey, I'm kind of interested in this. That was more than just like the childhood, like fun thing. I wanted to be a detective. I thought that would be fun.
Yeah.
Is like uncovering crime and
Yeah. What kind of books did you read when you were a kid? Like
I didn't.
Hardy Boys?
I very rarely read when I was a kid.
Okay.
I did not like reading. Very, very rare. And the books that I did read that I did enjoy was the Choose Your Own Adventure books.
Oh yeah.
And so they would get to a point where it's like, all right, I get to make a decision. I felt like I was part of the story. But yeah, it was.
Yeah.
And those are kind of mystery.
Yeah.
kind
I
of
like
books.
Sherlock Holmes and Hardy Boys and all those books. I also liked, I was big into like sports trivia, and I was a big reader. And so sports trivia and honestly Guinness Book of World Records and
Yeah.
like odd stories about certain players or whatever, their stories or biographies. So I always like that stuff. I was thinking about like, why was I a football player? I've been thinking of it's Halloween's in October, it's football season in my mind. And so that's why my birthday party is in May, and that was always around baseball. So I'm trying to think through why
Still sports stuff.
It's always sports. Yeah, always sports.
Have you ever have you ever had a point in your life where you wanted to be something or took a job or wanted a job simply because of the money?
I probably chose accounting probably for that reason in the very beginning. Thought it's a good paying job.
Yeah.
I was originally going to school to be an attorney, and that was strictly because they made some money. And so then I went to work for an attorney. He said, "Hey, you should probably not be an attorney." So he pushed me to accounting. And so I was such a good at my job. He said,
do something
"Why
different.
don't you go intern somewhere else?" And so, yeah, I probably chose accounting for the money, not necessarily like it was more of security of money. Like I'm going to have a job.
Yeah.
There's always going to be a job for an accountant.
That's my story too. Yeah. When I was a junior in high school, I remember making an active decision because I took an accounting class in high school my junior year. And I remember making a decision that I'm going to be an accountant. And it was two things. There's always job security because everybody is always going to need an accountant. As long as the IRS exists, it'll be in demand. And the second thing is in my limited worldview, I thought accountants make a ton of money.
Yeah.
And so I was like, I'll go be, I'll go be an accountant. And so and that's why I ended up declaring and going to school.
Well, it was related to money. It was like, how do you make money?
So short-sighted as a junior.
I was 18 and stupid. That was why I chose accounting. Yeah, but that's, honestly. And so today's topic is interesting to me because I do think about when I started my firm, I'd always been an employee somewhere. And a lot of our clients are that same way. They most of the time, if they're starting a business, it's maybe the first business they've ever done. They're like, okay, how do I get a paycheck? And like it is so surprising to me how many of our new business owners have had this issue come up and going, okay, but how do I handle my own check?
Yeah.
And I honestly, this tells you how good of accountant I am. this is one of the first things I was like, how do I get my money out of the business? Like, do
Yeah.
I just write myself a check? And so that was some of the early learning experiences for
Well,
me.
for the longest time, you never had to worry about it.
Yeah.
As an employee,
I worked so much. You only gave me this much money.
yeah.
Yeah.
And it as an employee, you didn't have to go worry about it. It was
Mhm.
every week or every 2 weeks, however often money showed up in my bank account and I'm good.
Yep.
But as an owner, if you do nothing, that never occurs.
Correct. And
So,
you're like, I need that money. How do I get to that money?
yeah,
And so this is something that comes up all the time. I mean, we have
it
had
is
this.
a super, super common question.
Yeah. And people are like, I know this is going to sound like a dumb question.
Yep.
I'm like, let me guess, you don't know how to get money out of your business. Like, no.
Yeah.
So,
Yeah.
and then they're like, well, can I do this? And I'm like, yeah, it's your money. They're like, what? So we're talking through all those things today, I think, as part of this, but also like there is a lot of head trash as a business owner that we all jump into, right?
There's the psychological piece of that of I have money and I've done a good job. So I have a business bank account that's separated from all of my personal stuff. And there's money sitting there. Sometimes there's a big pile of money. Sometimes it's just a little bit of money, but there's money sitting there. And I have to make the decision of what am I going to do with that money? Is that mine?
Hmm.
I mean, it's not uncommon to think, is that my money or is that the business money? Like there's a lot of psychological things you got to hurdle over. There's the physical, like how do I actually tangibly move this money, or what do I has to happen? There's a lot of things that kind of around the how do I get paid as an owner of a business. And yeah, you're absolutely right. Those are the things that we want to cover today. So here's where I want to start. Um, I own a business. What are some of the legal, not like the technical? These are the things that I have to consider and pay attention to in
Yeah.
the details.
Okay. So, yeah, if you have a business, the type of entity you are will somewhat dictate how you are compensated as the owner of that business. So, if you are a corporation or an S corporation, there those are one, but they're also two different ways. Um, if you're a corporation, the only way as an employee of that corporation, and that's what you are. If you are an owner of a corporation, you have to be an employee also of that corporation. You're going to get that money out through a normal payroll check. That's going to be you're going to set a salary, or you're going to determine how you're going to be compensated based off of the rules that you and your partners, or you and your other people in the business have, but you're going to determine a salary. And in theory, you're going to get back to a very similar spot as a normal employee that when you came onto now owning a business. Now, there's 1,000 caveats to that. That is like the level 1A basic. How do I get the easiest money out of my business? Now, let's say that corporation and you are a traditional what's called a C corporation, a traditional corporation, that business, after paying you your salary, has, we'll use round numbers, $100,000 still in the bank. Well, now what are my options? My options there are I can do a dividend payment to myself if I'm a C corporation. I could create a bonus and pay myself out additional, just normal salary, I mean, normal compensation on a W 2. And that's really the only ways you can get money out of the business. Like that's really it. Now, with that, if you're a corporation and you took a salary, the salary is going to be taxable to you individually. The remaining profit of the corporation is going to be taxable to the corporation. And then with that dividend, you're going to pay tax again on the dividends you received individually. So you in theory, on that $100,000, you're going to pay, let's say it was 25% corporate tax. You paid $25,000 to the government. You have $75,000 left. The remaining $75,000, if you took all that money out, you'd pay that at a normal income tax rate. That's not super efficient, but that's how a C corp works. Now, if you're an S corporation, taking money out of the business is a little bit unique. As we talked about before, an S corp is what's called a pass-through business, and what a pass-through is, the salary is still a requirement to get money out to an owner. The remaining profit is you would take that money out to the extent that you're allowed, and to the extent you have the money in the bank to do it, and you have what's called basis. You would take that money out, and that would be called a distribution. That's a distribution of profits. And that would not, in theory, trigger tax because you're already going to pay tax on the remaining profit of the corp before you paid yourself that distribution. That was a long way to say that entity matters. So now, if you are a partnership or an LLC that's taxed as a partnership, or you're a sole proprietor, this is all basically the same thing from a how I get money out. You're going to do a distribution or a draw. There's no salary requirement. You're not on payroll. Technically, you're not allowed to be on payroll. And so if that same business made $100,000 profit before paying you, you in theory could write a check for $100,000 or a dollar. It doesn't matter either way. That money is your money. That is one pocket versus the other pocket. The only thing that sucks about that is regardless if you take a dollar or all $100,000, you're going to pay tax on the whole $100,000 of profit. So, and being that it's a partnership, think about the secondary effect of this. When you pay wages, you have Social Security and Medicare and income tax you pay. Every employee pays it, and the company pays a portion of it. With a partnership, you didn't have wages, so you haven't paid Social Security. You haven't paid Medicare. So the profits from those partnerships or sole proprietors are subject to, I'll say self-employment tax, but that is Social Security and Medicare tax on that $100,000, and you're going to pay income tax on it. So you're going to be in the exact same spot if you're an S corp or a partnership taxes or an LLC taxes a partnership. The mechanics of how you get there is a little different. And that's where we start talking through how much money is reasonable salary to pay yourself. And the government has very clear expectation of what a reasonable compensation is for the role you're in. There is a number of documentation around that. And that's something that we work heavily with our clients on that are making significant money. Is we can't just say, well, I'm only going to pay myself $10,000 salary and everything's profit, because the salary would be subject to Social Security taxes and the profit's not. And you can't, and you don't want to probably say all the profit is 100% salary. So we have to kind of balance those two things to do it tax efficiently as best we can. And this is a lot where pigs get fat and hogs get slaughtered. So the reasonable compensation is a very structured rules around this about what is reasonable. And there's a ton of tools that we use to help determine what's that right in your role.
So really kind of the place to start there is what am I required to do? And that's really going to start with entity structure.
Absolutely.
If I'm a corporation, the required thing to do is I have to be on payroll as a W-2 employee, just like my front desk administrative assistant, whoever.
Correct.
Like normal taxable wages. If I'm not a corporation, I can't be on payroll.
Correct.
And so I'm not getting that W-2. Any additional dollar other than that is really, we're starting to talk about what is the most tax efficient way to get that dollar out of the business.
Correct. And that's where effective planning really can come in, particularly with owners and their businesses. So a lot of things will weigh into that. Well, do you own real estate? Are you a tenant of your own building? Is your business a tenant of a building that you own? That will create some opportunities for us to do some ownership compensation planning. What other assets that are being used in the business that you normally would pay for personally should be now paid for by the business, and therefore you may not need that as compensation at home. And I'll use, if I'm a real estate agent, I'll use that as a good example. They're on the road all the time. That car is generally a business asset at that point. And therefore, in their entity, we would probably put that car in that entity and talk through what best ways to get that car paid for versus compensation.
Yeah. Because essentially in that example, the business is paying for the car. Therefore, the money that's going to be going towards the car payment
I probably
is a deductible.
Yeah, it's a
so
deductible.
I don't have to pay tax on that amount,
yeah,
which makes sense. Now, a lot of business owners start from the lens of I don't maybe care about. I'm not as concerned about the tax efficient way to get money out of my business. I just know that I got a mortgage due and I got to put food on the table. So like if I'm a partnership, which is we deal with heavily here in Tennessee, it's okay just to write myself a check out of the business bank account to go buy groceries at Walmart.
Yeah. So husband and wife partnership, use that as an example. Hey, we made $10,000 this month as a profit. I have $10,000 in the bank. In theory, if I had no other expenses I need to pay for in the business, I could take that whole $10,000 and put it in my pocket. I'm still going to pay tax on that $10,000. That doesn't change anything, but that's my money.
One of the common things that we do run into is, especially here in Tennessee, where it is a partnership heavy state, is it doesn't matter if you have $100,000 sitting in the bank account on 12/31 or $0 sitting in the bank account on 12/31. That profit of 100 grand, whether you took it home or not, is still going to be fully taxable.
Correct. And, things that people don't really consider when they're thinking about this is, let's say you borrowed money to buy, let's say you opened a gym. I'll use that as an example. I had to buy a bunch of equipment and I borrowed that money. And now let's say I borrowed $100,000. And let's say this year I had to pay back 50,000 of it with my debt service, but my business made 100 grand. Well, I'm not going to necessarily get to deduct the debt that I'm paying back. I got to deduct the asset I bought, but I don't deduct the debt I'm paying back. And so now I only have $50,000 left in the bank. I still made 100.
Yeah.
And so that's where we have to start really making them understand the difference between what's profit and what's in the bank.
Yeah.
And that's always definitely a learning experience for a lot of new businesses. Like, oh, I thought whatever's in the bank is my profit. No, unfortunately, that's not how it works. Yeah.
Yeah. That's a good distinction to make.
Now,
all right,
go ahead.
So we have the mechanics of I've gotten cash into my at-home pocket, if you will. We have to consider the requirements, what the IRS says I have to do, especially if I'm a corp. And then there's I got bills to pay. How do I actually physically get money home? And those are important things to consider. There's also a psychological component of all of this. It's not uncommon that we run into a business owner that is doing incredibly well, and they may have a large sum of money in the bank, and they have to get over the hurdle in their mind of, is this my money to some extent?
We've had it both ways. We've had it where the client is making a very nice living and they make significant money and they feel guilty of I feel like they have to ask permission if that's their money. We've also had the reverse, which is they're not making enough to justify the amount of money they are taking out of their business. So we'll use the first example first, which is I've made, what's your round number? I've made $500,000 this year and there's $350,000 in the bank and I've already taken home $150,000. Let's just say that. Well, can I take some of that money too? Yes, that's your money. You're going to pay tax on it either way.
Yeah.
Now, that is something that most of the time there's a couple fears in there I think of. It's the fear of, do I need to leave it in there for a reason? Is it going to hurt me tax wise? Am I going to pay tax on that money additionally or whatever? That's usually one. The second one is they are a little afraid of how much they should have leaving in the business account for I don't know what I might buy a piece of equipment next year. Yeah. I might need to hire 5 people. My business may just go in the tank and I don't have the sales I'm expecting. And all those are legitimate concerns. You need to make sure you understand what you have in reserves and why you have it in reserves.
Yeah, I think that's even more common among growing businesses.
For sure.
Where, maybe 4 years ago, I did $100,000 in profit, took home 100,000. Year after that, I did 150. Next year, I did 250. Next year, I did 400. Now I'm at 700. And it's hard to get your head around the idea of 5 years ago, I was making 100 grand. And now I'm making $750,000.
Yep.
Surely that's not all my money. And
right.
And you do, absolutely. They do have if I do it this way, is it more tax advantageous? And there's that component of it, but there's just the mental block of like, surely there's a catch to this. Surely I didn't just have this great of a year. And you have to kind of process that a little bit.
Yeah. And one of the things we always kind of talk through is, one of the things that kind of comes up as the business, let's use your example, somebody who's gone from $1 million to 750. What we see most of the time is that the owner's lifestyle starts to expand. Mm-hmm. They don't always realize the income tax consequence of that growth. So let's just use your example, $750,000 profit, talking about having to pay $300,000 in taxes. That's $75,000 a quarter in estimated tax payments. And first quarter happens and they're like, yeah, I'm not sure it's going to happen all the time. I really need that money right now at home because we just decided to expand our house and I'm doing a new pool and I just bought my wife a new car.
Yeah.
And then we
had a killer year last year. So I went and bought a new Mastercraft.
Yeah, it's great. Yeah. So then second quarter comes along and they're like, well, yeah, it's still on the way up. I don't see it. I've never made this money before. I see all this money. I'm going to go ahead and take it. And we always have to talk about that hedge of, you do realize that there's basically 30% of every dollar you profit right now is going to go to the government. And so what is the systems you're putting in place to put that money aside right now and not let your lifestyle live? And I'll be honest, this is something that I went through very much. I mean, I don't make, crazy money, but like as my business grew, because you're in the beginning, you're, rice and beans and beans and rice. And then as your business, like, well, man, I need a new car and I don't want to pay tax and I'm going to do this thing. And like, so, you're like, God, I didn't put my money aside like I should have.
Yeah.
And
you got to go through the stages even of, well, surely this isn't always going to be this good. So maybe I need to leave a little bit more money in the business, because the flip side of that can be true as well. Is if I'm a scarcity mindset of like, I need to hoard money because this can't continue. And next thing you know, you can have a big pile of cash sitting over there. That's like, you know what? I may need to loosen the wallet a little bit. And
I mean, I can think of a very explicit client. He was having a great year. He saw the money in the bank. He saw his home mortgage. He's like, I can pay my whole house off. And he did. And then, we thought, well, you're going to owe 60 grand in taxes this year.
Go get a home equity line of credit.
I just paid off my house. Where am I going to, like, yeah, we should have probably had some of those conversations before you did that, because we still have this tax bill that's here. And so tax efficiently taking your money out of business is important. How much to reserve your cash is important. How to plan for your cash is important. So all those things have to kind of go into. So we're talking about how do you pay yourself, but it really is how do you start to budget the balance between your business's, health with cash and money that you need to survive, and how do you manage your home finances just as much in your lifestyle. And so that's what I think we'll talk through.
Yeah, I think that's a good point, because there is a line there that can be difficult to balance. It's really, it's the cash management piece of everything. There's a psychological component of that. There's, all the things and as a business owner, especially of a growing business, just know that you will encounter this.
Yeah.
Like, it is going to happen. You will feel that tension at some point if you're not already.
We know this with a growing business, growth is generally expensive. Mm-hmm. And so in order to grow at the rate you want to grow at, you're going to be investing in, hey, we're going to develop this new product line, or, hey, I want to open up a second location, or, hey, I wasn't thinking about that, but the roof needs to be replaced and we've had an issue. So as you're growing, we've found this out to be in our business. It's like, okay, we have technology has to improve as we grow. Hey, we thought about these 3 other roles we really need to have as we keep to expand. Your footprint of your building may be a problem. Okay, well, you have to get new furniture because we had to add those people, and then there's new computers tied to get those new people. So as you're kind of thinking through that growth, if you want to grow at 20 or 25% or 50% or whatever that number is, that's not going to all hit the bottom.
Yeah. Yeah. So let's talk about the how, right? So, the how for me starts with the concept that we talk about internally called profit first. In the psychological piece of this is the first thing that you have to consider is profit.
Yep.
My number one goal is to have a profit in my business, and that is mine as the business owner. And that is not a bad thing. It's not a scary thing. It's not a dirty thing. It's a perfectly fine goal. And because if you don't have a profit, you can't continue doing what you're doing anyway. So like it's okay to say that my goal in owning a business is to have a profit, and I want that profit to be a magnificently large sum of money. From there, we can put systems in place to help me manage what cash I need in the business, what cash I'm taking home, what cash I need long-term, what cash I need in taxes. Walk me through, just on a basic level, basic understanding of the profit first mindset when it comes to cash management.
Yeah. I mean, as the title says, profits first, right? So a typical income statement or profit and loss report would show income less expenses equals profit. Profit first really wants you to think about that different. Profit equals expenses, income less expenses, right? So that idea of I'm trying to figure out what I want to make first. The second step of that is I know I have two things right away that I'm going to always want to pay for: my time and my efforts. So it's my owner's compensation and my taxes. The taxes on the business, taxes on me. So I have to have a system that puts those things in the priority they need to be. So if I have profit, what I want to take home, and taxes, what is really left. And what's left is what you have left to spend. That's it. So
and that's spending in the running of your business.
that is the spending of running your business. And so, profit first would say that's the idea of what they call small plates. So by forcing yourself to say, well, we're going to use numbers again, because it makes the example come easier to me. So if we make $100,000 of income that came in the door this year, I know that I want to make, these round numbers, 10%. So the first 10% of every dollar we collect is going to go into my profit account. And so, let's say I want to make I'm going to use 5% for tax and 5% for owner's comp. So I know that the next 5% of every dollar I collect is going to go to my own paycheck. 5% is going to go to taxes. And so now I've already put $20,000 aside right away. I got that $100,000 all came in at one time, and I have $20,000. I have $80,000 left. That's what my business has to operate on, because that's all there is. I'm not going to go borrow money. I'm not going to pay myself extra. I'm not going to, take money out of the operating pool and take it home with me. That's what I have left. And over time, what you should say is, okay, I said I wanted to make 10% profit. How do I get that to 11%? How do I get that to 12%? Over time, I don't want my operation expense to be my profit to be whatever's left over.
Yeah.
That's not the goal. I want to have a priority of this money is set aside for that.
It's easy to be unintentional when you just say my profit is going to be whatever is left. Because then I'm not intentionally turning the widgets the right way to actually increase that number.
Yeah. And what that tells you is if I have in this case, I only have 80% of every dollar I collect to work off of to operate my business, I have to operate in that constraint. So, hey, I want to go get that new truck. I don't have the cash. I need a new employee. How do we get more efficient with the employees we have? Yep. I want to get this new technology thing, or I want to expand my space. This is what I have to operate with. Now, in order to fund your next growth, you may decide out of the 80%, you may want to put 5% of that to long-term reserves, or that's the expansion fund. So I would think about this in the home budget world. This is you're saving money for the vacation in the future. You're saving money for the next home down payment you want to make, or the next new car. You're not just saying, well, I'll just take that out of operations because that's fine. No, then I can't operate my business. So I'm putting the money into very intentional buckets of where I want to spend the money.
Yeah. And it really is just a system on some level to manage the money flowing through your business, but it's starting from the lens of, as the owner, how much am I going to get compensated?
Correct.
Because step one is determine a realistic number that you want to take home. And then everything else is, I'm going to allocate dollars to tax. I'm going to allocate dollars to future, like retained earnings, future, maybe capital improvements, whatever it is. I'm going to maybe throw dollars over to, if I'm a heavy equipment based organization, future purchases that's above and beyond bigger, other stuff. Like I'm just allocating those funds. And now I know this is what I have to go take my team out to lunch. I got Pizza Hut money, not
Ruth Chris money.
Ruth Chris money.
Right.
And that's a fine thing to do.
And so what I like about Profit First is we operate it internally. I will tell you, I'm a spender first. It puts the constraints on me to go, I can only spend that money. I can't go spend, this is what I got. This is the pile of money I have left. This is, my taxes are easily taken care of because every time we collect money, a percentage goes to my tax account every quarter. At the end of that quarter, whatever's in that tax account, I write a check to the IRS and I taxes are square. And over time, my goal is when we put people on a profit first system is, okay, you may not be making enough money right now, or you may be taking too much money home. We have to figure out where you are and also where you're trying to go over the next 2, 3, 5 years. And by doing that, we create a plan that says you're here, you're in theory, you're taking 100% of the money that's coming in the bank. We need to start allocating that to taxes. This tells you what you can actually take home for yourself. Here's what's left to operate the business under. And then we have to find the gap of where you are versus where that is. And there may be some hard choices that have to be made. But then you have to create a plan of, okay, how do I squeeze that down even more to get where I want to make?
Yeah, it does. It gives you the information that you need to sometimes make those hard choices, sometimes make those decisions that are a lot more exciting. Like maybe I'm going to Italy instead of Nashville.
Yep.
This, next vacation. It does. It gives you the insight to have those good conversations, good decisions.
And from a business owner standpoint, a lot of times this makes a lot of sense to them because it is like doing a home budget. And it allows them to have the freedom to spend the money because they're very clear of what they're allowed to spend. And they know, like, I am paying myself. I am making a profit. My taxes are reserved. So I can make the choices on the money that's left because that is what's left.
A lot of freedom.
Mm-hmm.
A lot of freedom. So good conversation, Matt. I appreciate your insights and all that stuff. If you're a business owner, my message to you is don't feel like you're alone whenever you have that question of how do I pay myself? What dollar here is mine? What dollar here is the business? You're not alone in that. It's confusing to everybody. Hopefully today's conversation gave you some pointers, specifically in the profit first stuff of how you can get started being more comfortable with the money that is in your business that does need to come to your house, or maybe intentionally save for some other things. I would love your feedback though. So if you have any questions or have any comments, make sure that you are clicking comment, give us some information, give us some feedback. We would love to hear from you. Also, make sure that you click that like and subscribe button, all the things on all of your social media stuff. Share our podcast. We would love to see that. So thanks everybody for listening. I hope you have a great day.